What's up, guys? Eric here from MajorLeagueTrading.com, and coming at you with another free nightly video. And this one might get a little lengthy, just forewarning. So we'll see whether or not I can kind of keep it contained, or if we just kind of pull back the curtains and start talking about a bunch of stuff. So I have a couple things in which I want to talk about today. Obviously, really nice move overall on the day here. Futures just reopened, well, a couple hours ago, so we'll have to go ahead and use the SPY and stuff like that. But just to give a quick recap here, you can see the SPY, we had the 638.54 level in play. We were talking about that one last night. We talked about it on Instagram. We did manage to get that gap up. Couldn't quite open above the level, but we did manage to get a trend and had a pretty decent day there. S&P is up 1.06% here. NASDAQ up 1.26%, so from 575 opening print up to 580s on the day. So we had a really nice overall move in the NASDAQ futures themselves as well. You can see that there. And then the standout today, the standout is going to be in the Russell, 2.97%. My baby, the Russell there, coming through with the big move. And then kind of rounding out there, pretty equal with the SPY there at 1.06%. Is going to be in the Dow. So you can see one of the things in which we talked about coming into this week was in the Sunday Stock Talk, even specifically, we had it here, was that, when you look at the Russell compared to the S&Ps and NASDAQ, I wanted to lean conservative on longs, right? Because the Russell and the Dow were weaker. And now one of the things in which we've seen happen here, specifically when we look at the Russell, is we have a really nice move on our hands. A little small gap over red, and we're now starting to push back through these highs over here. And we've got some room here up into 229.20 or 229.94. So we've got a lot of room to the upside here. And even if you look at this just from, these are the highs, all-time highs for the Russell, which were set, 8 or 9 months ago here back in November of last year. And you take a look at something like the SPY, we've already surpassed, that kind of 610 area here. For the S&Ps, we're, trading 642s, right? Same thing for the Qs. But the Russell has been that one that's lagging behind and really kind of taking its sweet time, right? The Dow is getting close. The Dow is getting really, really close to kind of breaking those highs. And I think that actually ends up happening here over the next few weeks as well. But the big one today is the IWM, right? The big move today is the IWM. And seeing that move take place, I think is a really good thing for the overall markets here in general. So I'm excited to see that. Now, let's bring it back a little bit here, and we'll talk about a trade from today and kind of what the overall game plan was coming into the day, right? We had the plan for the S&P was that the SPY, the gap over the level, get the pullback, do the test, do the whole thing, right? Well, the only market in which we were able to two markets in which we were able to actually get that gap was in the Russell and the Dow. So the trade in which I took from today was right down here in the Dow in combination with having the opening print and having the level here from 44 247s. And we had a divergence, which was really, really nice. So, before we go into that here, I'll just show you guys. Here is a screenshot from that trade in the Dow here. So this was a screenshot I took today. I ended up using the micro futures for this trade and still ended up walking away with $536.50. And again, this is on a funded account with Tradeify. If you guys have not used them as a prop firm and you want to check them out, I'll put a link in the description below. But that's not the point of this video. The point of this video is I want to show you the reason behind taking this trade, what it ultimately looked like, what the divergence was, and then break that down even further into the risk reward that took place that allowed me to make this $536.50. Like, what did I risk in order to do that? Was it $1,000? Did I risk $500? Or did I only risk $100 in order to make this trade work? What was that R multiple, right? So we'll go ahead and set the tone, right? We're looking for that gap. We're looking for that pullback. And then from there, we need some sort of reason, some sort of entry mechanism to get into this trade. And I'll move this over just to make sure my face is not blocking the Russell down here. And you can see these are the levels in which we had to work with from today. So we had the 64.27 quarters, 64.33s. In the NASDAQ, we had 7.85s. The Russell had 30.90s and 73.40s. And then the Dow had this 247s down here with the big dream target up there at 680s. That was the goal for the day, was about a 440-point move coming from that level to get up into that target area. Now, you'll notice there's a couple green arrows here, and there's obviously a lot of red arrows here on the charts, right? We get a bunch of red arrows here in the Russell. We get a bunch of red arrows here in the Dow. And again, we're going to ignore those at the moment just because of the overall trend in this market, right? If you understand and know the way in which the divergence is constructed and what it's meant to do, then yes, we are going to have these red arrows up here. That doesn't necessarily mean that each one of those would be a trade, or it's something that we would even be willing to take because of the counter trend nature to the larger time frame charts. So that right there in and of itself is a massive tip just for anybody that's looking to trade in general. Is like, why would you be looking to be aggressively short if the market is in aggressive long positions? Like if the market is moving higher, it's been moving higher. Yes, there are certain times where some counter trend trades are available, but for the overall direction in which we want to trade, we want to be with that momentum. We want to be with that trend. So today, we were looking for longs here. And the question becomes is whether or not we were going to get up through 64.33s and hold and rally from there, or if we were going to get up through 7.85 quarters and rally from there, right? That was the two main levels in which we had to pay attention to for the S&Ps and the NASDAQ. And then the same thing in the Dow and the Russell was we just wanted to see them hold these lower levels. Now, I ended up taking my trade right down in here. And when we look at this, when we go, okay, here's the 950 bar, the thing in which we had in place on that bar was not only did we have the Dow opening above the level, not only did we have the pullback to get down into 247s, but at this moment in time at 950 when I took my trade, we had signals in the S&Ps, meaning the S&Ps here actually broke down, made new lows on the day, which is extremely important because at the same time, the Russell, even though it kind of looks like it's close, the Russell did not make new lows on the day here on this bar breaking us down. And then on the 950 bar as well, we managed to hold lows in the Russell and lows in the Dow, which was really, really important for the overall trade that we had going here. Now, 10 minutes later, we got another divergence where the S&P came down, made new lows. NASDAQ came down, made new lows, and that's into 10 o'clock here. And if you notice at that same moment in time, after that divergence was put in place, right, you would have to go back and watch this film, if you will. We ended up making these new lows here in the S&Ps and the NASDAQ. And then after those new lows were made and we started to rally that back, we ended up popping and getting new highs here in the Russell and the Dow. So we saw, and we were talking about it in the Discord, we saw a little bit of flip-flop action kind of unfolding during that whole process down there. And it was like, okay, cool. This is potentially a really good position. We've got a lot of things working in our favor. Not only do we have this divergence here from 950, but then we get a follow-up kind of secondary divergence, right, at 10 o'clock while we already have profits in this position, right? We're already going in the direction in which we think that we would move, right, higher here. And we get the S&Ps and NASDAQ to give us a little secondary divergence and a nice little signal in place here for the S&Ps and managed to get back up through, obviously, opening print, through the levels, the whole thing, right? And it just ends up working out really, really nicely in our favor. And we captured a good portion of this overall trend. And if I bring this over, you can actually see here, this is the Dow futures trade from today. So you can see I ended up buying 4 contracts with an average price of about 252. And you can see my exits here, 483s, 44 500s, and then 44 560s and 44 539s, right? So my top exit was good for 310 points. My worst exit, if you will, my lowest exit here at 44 483s was good for like 233 points, right? From 250s up to 483s. Now, with that, right, and if you do the math on that, that works out to the ladder window I showed you earlier with the profits and all the things, right? But when we break this down, right, we see the strategy here, we see the divergences that allowed us to take that position. And then when we come in here and we really want to see what our risk metric looks like on this little tool that I had built, which if you guys have not already gotten this, it's inside the Discord, and I'll leave a link down below as well. You can join the free Discord and pick this up as well for your own Toss account. Is really, really cool, because what it allowed me to do was it allowed me to come in here and say, hey, I want to trade this long. My entry is going to be 44 252s, which I was doing this math kind of on the fly, right? And then I'm going, okay, my stop loss is going to be down here at 44 202s, which is just kind of under this low at the moment. That low was 210s. So I gave it the easy, hey, I'm going to give this a 50-point margin, right? And then I go, okay, how many contracts can I buy? Well, since I'm trading the micros, specifically in this account, it's like, okay, my risk tolerance is about $100 in these accounts, right? So I can buy, if it's 50 points on a full size contract, you know, that'd be $250 per contract, but on a micro, it's going to be a tenth of that. So it's like, okay, cool, it's $25. Well, if I'm giving it 50 points, that's $25 times 4, I've got $100 worth of risk in this position. So it was good for a little over 5 Rs in total, but my goal was to try and give it room and let it get all the way up here into 680s, right? If it really wanted to go, then that's where it had room to. And if we were to hit that target up there, it would be good for 8.56 Rs, right? I'm risking 50 points and I'm looking to make, you know, a total reward here of 428 points to the upside. I will take this trade with the divergence, with where we're at in the markets, with the trend, all of the things, right, with this level of risk reward. And it really didn't matter which markets in which you chose, right? Whether you picked I gave out an idea in the Russell as well inside the Discord. I gave out an idea in the NASDAQ a little bit later on, right around opening print, which would be like around 733s, which that ends up moving for 200 points, right? It really didn't matter which market in which you picked. They all ended up doing the thing today, and they all ended up giving really nice risk reward trades, right? So this trade in and of itself, while yes, we didn't quite make it a target, we managed it accordingly, right? If you notice on this little screenshot over here, you can see right where I get out at, which was right kind of over in here. This is a 5-minute chart. This is a 2-minute chart we're looking at, but it's still right in through kind of this area was where we were looking to go ahead and get out of that. And the main reason in which I was looking to go ahead and get out of that over here was that we were going to be breaking these highs from back over in here, which was the 44.583. And once we broke through those 44.583s, it's like, hey, this realistically shouldn't need that much more room, right? So I was able to bump my stops up just under these highs up here to 560s and then 540s. As you can see what my exits were was 560s and 539s, right? We were able to go ahead and bump those trails right up in through here, which ended up getting taken out right here and then right down over in here essentially, right? Yeah, lows of 534s. And giving this a really, really tight room going, okay, we're at 44,600s. I've got another like 80 points I can make here. I really don't think it's probably in my best interest to give back 100 or 200 or 300 points, right? Which I was up at that point, 300 and some change, right? So it doesn't make sense for me to have to give this a bunch of room back when this breakout here should have been the move that got us up into 680s into the close there, right? So that's another little kind of sidetrack from the original intent of the video, but a little bit of management tip inside of that as well, right? For this overall Dow trade. So could you have used the 5-minute and traded just the divergence, sure. I took my entries a little bit early here, right at 252s, right at that opening print, right here inside of all of this stuff happening down here. I watched this price make its move down to 210s. I saw the divergence like we talked about over there on the S&Ps and the NASDAQ. I was watching to make sure this didn't push down under those lows, which if we had to give it to those lows, that's an extra 10 points, right? Those lows are 193s. We gave it just under this low here at 210s, right? And why is because it really shouldn't have to come back down and make new lows anymore because we already have the divergence in place. The S&Ps and the NASDAQ have already come down and made those new lows for us. And the Dow is the one that said, hey, no, I don't want to do that. I want to go higher. If you want to participate and ride with me to 44,680s, then cool, jump on, let's go, right? That's essentially what I was being told from the markets. That's what they were telling me at that moment in time. So I decided to go ahead and put the position on. I followed my risk metrics and my numbers that I needed to in order to keep my risk in a line for those accounts, right? At a roughly $100 risk per trade. So anyways, I think that's what I got here for today's overall trade. And we broke down a little bit of strategy. We broke down some risk reward, all these things, right? And yes, we couldn't quite get to targets, which means 44,680s is going to be our targets for tomorrow. Fingers crossed we get another pretty divergence trade that gives us risk reward to get up into 44,680s. And then same thing holds true across the board. With this overall move in which we've seen, my plan here tomorrow would be to continue to trade this to the long side here. We really don't have any levels in which to play with anymore, unfortunately. But we'll look for divergences tomorrow. Ideally, not the first divergence tomorrow. Ideally, the second divergence would be the way in which I would love to see that take place and then be able to trade that higher from there. So anyways, hope you guys enjoyed this video. It went a little over the place and we did quite, almost got to the 20-minute mark. So if you're still watching, I appreciate that. As always, give the video a thumbs up if you liked it. Hit the comment down below, subscribe, do all the fun things. And I will see you guys on the next video. Take care. Peace.